Hello guys, so in this video I am targeting 2 points in CSR which generally students tend to mix up. Alright, there are two concepts. Concept number 1 is, what if the company spends more than the minimum requirement? You know, right, that the board shall ensure that the company spends in every year minimum 2% of the average net profit of 3 preceding financial years. This is the minimum requirement, guys. But what if actually the company spent more than 2%? What if the actual CSR expenditure is more than 2% of the net profit, average net profit of 3 preceding financial years? Then what will happen? See, we will see what is the excess, how much extra the company spent. This extra can be set off by the company across 3 succeeding financial years. Across 3 succeeding financial years. Let's try to understand this a little better. What is this concept? Two concepts I am discussing with you about in this session. Two concepts which generally students get confused between. Concept number 1 is what I am focusing on right now. Minimum the company is supposed to spend, minimum the company is supposed to ensure it spends 2% of the average net profit of 3 preceding financial years. You know the significance of the word ensure, all that we've already discussed. So right now my focus is on what if the company spends more than this 2%. Minimum requirement is 2%, but what if the company spends more than 2%? In that case, I will see what is the excess that the company has spent over and above 2%, how much extra has the company spent. That can be set off against the requirement of the next 3 succeeding financial years. And for this, there is one small simple precondition, and the precondition is that a board resolution has to be passed in this regard. So if this precondition is fulfilled, then whatever extra the company has spent on CSR, this can be set off by the company across the next 3 years. Now let us try to understand this with the help of a numerical example. That's how we will get better clarity. Let's say the minimum amount that the company should have spent on CSR, the minimum CSR spend, that is a 2% number, was 100%, let us say. And I am talking about year 4. Okay, but how much did the company actually spend? Let's say the company actually spent 120 rupees. Alright, so minimum spend was, let's say, 100 rupees, but the company actually spent 120 rupees. So how much extra did the company spend? 20 rupees, guys. Now this extra can be set off across the next 3 years. What does this mean? In year 5, the minimum amount which the company should have spent is, for example, 150. But the company actually spent only 140. Will the company be punished? No. Why not? Because company already has an excess of 20, guys. This excess of 20, out of this excess of 20, 10 will be adjusted. So it is as if the company has spent 140 plus 10, company has spent 150. So there will be no implications on the company. In year 6, let us say, the minimum requirement which the company should have spent on CSR is 180. But the company actually spent 175. So actually if you see, company spent 5 less, guys. But it's okay because we already have excess 20, out of which only 10 is adjusted till now. We still have excess 10. Out of that excess 10, 5 I can adjust over here. So therefore 175 plus 5, it is as if the company has spent 180 on CSR. Criteria fulfilled. Now in year 7, similarly, the company's minimum spend requirement was 200. 2% number was 200, but the company actually spent only 198 rupees. But no problem, because company had spent excess 20, which can be set off across 3 years. We have already utilized 15. We still have 5 more. Out of that 5, we can utilize another 2 over here. Are we getting it? So it's as if 198 plus 2, company has spent 200, company has spent the minimum requirement, no implications again. So out of the excess 20, how much you have utilized? You have utilized 17 over here. We still have how much excess left over? 3, guys. Now can this 3 be used against subsequent years? No. It can be set off only against the requirement of the next 3 years. After this, if you still have excess amount left over with you, this will simply lapse. Now do you have proper understanding of this first concept? What if the company spends extra? Whatever is the extra, company is allowed to set it off across the requirement in the next 3 years, but even after 3 years, if any amount is still left pending, that will lapse. Alright, this is one concept. Now listen to my next concept. I told you there are two concepts I needed to discuss with you. The second concept is about surplus which arises out of CSR activity. The first concept was, what if the company spends more than 2% of the average net profit? What if the company spends more than the minimum requirement? The second concept now is about surplus. What if the company has any surplus out of CSR activity? Listen to me, I'll explain it to you. See, what is the whole objective of CSR? Why does a company do CSR? Does the company do CSR activity because the company wants to earn profits? No, that's not the objective. Company does CSR activities because the whole objective is the society has to be benefited. So CSR has only one objective, which is benefit of society. Profit is not the objective of the company. But let's say by chance, by mistake, the company earns profits from CSR. Like, let us say the company decided to construct one hospital as a part of its CSR activity, and the company decided that through this hospital, the company will charge a very low amount of fees for getting doctor consultations. But however, the response was so good because it was the only hospital in that particular village. So many patients came to that hospital that the total fee collected was much more than the expenses of the company. So therefore, the company did not have any intention of making any profits through the hospital. The whole intention of creating the hospital was for the society's benefit. The company's point of view was, we will charge a very low amount and that's how we will benefit the society. But the thing is, there were so many patient admissions, there was so much fees collected through these patient admissions that the total fee collected was much more than the expenses of running the hospital, and the company actually has a profit now. So, the company has earned profit from the CSR activity. First of all, this profit is called as surplus. So, when I say surplus, what does surplus mean? Surplus means that company has made a profit out of CSR activities. See, agreed, profit was not the objective of CSR activity, but by chance, by mistake, the reality, the fact of the case is, even though I did not have an intention to make profits, but the company made profits out of CSR activity. Now the whole question arises that what can the company do with this profit? What should the company not do with this profit? Listen to me. So whatever profit the company has made out of CSR activity, this profit should not be set off against the CSR requirements of the company. It should not be set off against the CSR requirements of the company. Then what to do with the profit? Tell me, using this profit, okay, when the company is declaring dividend, can the company take this money? Can the company declare dividend to shareholders out of this surplus? No, even that is not allowed. Company declare dividend out of your profits, not out of profits from CSR activity. Then, whatever profits the company has made, will this profit be included in the business profits of the company? Like when the company says, in the current year I made so much profit, in that can we include this profit from CSR activity? No. So three things we cannot do, guys. We cannot set it off against the CSR requirement of the company. We cannot declare dividend out of the surplus. Also, it cannot be included in business profits of the company. Now ma'am, you've told us what we cannot do with the profit, but what can we do with the profit? Okay, there was no intention of making profit, but I made profit. Now what to do with the profit? Listen company, you have three options. Either option number one, either you can plow it back into the same CSR project, which means company, you made this profit, you made this surplus out of hospital, no? You reinvest this money in the hospital itself. You plow it back. Plow it back means reinvest it into the same CSR project, option 1. Option 2, you can transfer this surplus into unspent CSR account, and you can use this unspent CSR account, you can use this to carry on any CSR project. Option 2. Option 1, you can plow it back into the same CSR project. Option 2, you can transfer it into unspent CSR account and use the money in the unspent CSR account for any CSR project. Or option 3, you can transfer this surplus into any Schedule 7 fund. Like in Schedule 7, you have Prime Minister Cares Fund, you have PM National Relief Fund, you have the Clean Ganga Fund, Swachh Bharat Kosh. So you can transfer it into Schedule 7 fund. Understanding. So company is asking you, what should I do with these profits? What should I do with the surplus? Company, you have only 3 options. Either you can plow it back into the same CSR project, or you can transfer it into unspent CSR account and use that money for any CSR project, or you can simply transfer it into any Schedule 7 fund. Out of these 3, any of these 3 you can do. Either put it back into the same CSR project, or transfer it into unspent CSR account, or transfer it into Schedule 7 fund. Okay, now this much you must have learnt, I am very sure. Even this concept, what if the company has earned excess, you must have learnt, I am very sure. But see, I will give you one numerical example to help you understand this surplus better. Okay, I will put down the question for you on your screen, try answering. Let's call this a small concept check. Let's say we are right now in financial year 24-25, let us say. Okay. Now in this year, my minimum spend, that is minimum, the 2% number, 2% of average net profit of 3 preceding financial years, minimum spend for this particular year is 100 rupees, let us say. Now by doing CSR activity, I have a surplus out of some CSR project. Let's say 2 years back, as a part of CSR, I had constructed a hospital for the benefit of a particular village, and from that CSR project I have surplus, I have a profit of 20 rupees. Okay, now this 20 rupees, the company has reinvested this 20 rupees in the same CSR project. So this 20 rupees has gone what? Into some CSR activity. Okay, now comes the next point. Company, in addition to this 80 rupees, the company has contributed to the Prime Minister Cares Fund. Now just to let you guys know, contribution to PM Cares Fund is a Schedule 7 activity. Even this is a CSR activity. Okay, now which means what is the total amount which the company has spent on CSR? Total amount which the company has spent on CSR in the current year now is 100 rupees, guys. This 20 rupees over here which was spent on CSR, and this 80 rupees here which was also spent towards CSR. So total 100 rupees is spent on CSR. Now my question to you is the CSR obligation met by the company? The CSR obligation under section 135, is it met by the company? Can you say that the company has properly fulfilled its CSR obligation? Is there a non-compliance? Yes or no? See, listen. Minimum the company has to spend 100. This 80, yes, you will count this 80, no doubt. I'll repeat again. This 80 can be considered as CSR expenditure of the current year. But this 20 cannot be considered as CSR expenditure of the current year. That is what we have written over here, that this surplus cannot be set off against the CSR requirement of the company. So whatever surplus the company has utilized by investing it in CSR, this cannot be considered as CSR expenditure of the company of the current year. See, I'll repeat again. What is a minimum spend? Minimum the company is supposed to spend 100 rupees on CSR. The actual CSR expenditure of the current year is only 80 rupees in this question. This 20 rupees, whatever surplus the company has earned, this 20 rupees, this surplus, yes, it was spent towards CSR. But this cannot be set off against the requirement to spend on CSR in the current year. That is the meaning of this sentence, that it cannot be set off against the CSR requirement. This 20 rupees surplus cannot be set off against the spending requirement of 100 rupees. This 20 rupees cannot be considered as current year's CSR expenditure. Yes, this 20 rupees was spent on CSR, but it cannot be considered as if it cannot be considered as if company has spent this 20 on CSR. So in the current year, there is a shortfall of 20 rupees. You are understanding? So understand the comparison now. If the company has spent extra on CSR, this extra can be set off against the CSR requirement of the next 3 years. But if the company has earned a surplus out of CSR activity, yes, that surplus will go back into CSR, but it cannot be set off against current year CSR requirement. Are you understanding? It's a very interesting concept. If you interconnect both these provisions and see, there's a small, place of twist possible. There's a small twist that is possible in both the concepts if you compare and see. And they've not tested this twist yet. So be well aware. In case the company has spent extra on CSR, that extra can be set off against the CSR requirement of the next 3 years. But if the company earns any surplus out of CSR, yes, even that has to go back into CSR only. But that cannot be set off against the CSR requirement of the company. That means just because this 20 rupees has been spent towards CSR, you cannot say current year CSR expenditure is 20 rupees. You cannot include that 20 in current year CSR expenditure. So current year company has to spend this 100. This 20 rupees is over and above the 100. Understanding? So whatever is being reinvested in CSR project out of the surplus, this cannot be considered as current year CSR expenditure. Alright guys, so these 2 points is the comparison that I wanted to show you all. I hope you've understood this, and I hope that your clarity is perfect at this point. Thank you guys. Bye-bye.